Seconds of Trading. The reason for calling 600 seconds of trading is that over the next 600 seconds I'm going to provide you guys with a quick update on the markets, so you'll know more about markets like the euro dollar, Bitcoin, crude oil, gold, and the DAX 30. If you have any questions, just want to say hello, use the chat box to your right. And this is something that we usually host here at the live trading room Monday to Friday at 9 a.m. London time. Just need to click on this link here to be able to join, and it doesn't cost anything. And yeah, it's a good way to know what's going on in the market and learn from someone that is experienced and also profitable when trading financial markets. At least I'm profitable since 2014, and hopefully it will continue to have profitable returns going forward. All right, let's get going. Click here down below if you're new to trading, and even if you're not new to trading, you need to bear in mind that you're trading forex or CFDs carries a high degree of risk, and there's a risk really that we'll lose our invested money. And if you're a professional, you can even lose more than what you invested. So you need to bear that in mind. Just click at the link down here you can read up on. Okay, so let me just ensure that we're up and running. Good, I can see that we're up and running. So good, guys. Thanks so much for joining me. Hi, thanks so much for joining me as well this morning. And let's begin. So, what are people talking about? Well, G7, as you probably know, and a big decline in crypto markets. So that's what we're gonna address today. Of course, we're gonna take a look at the actual markets, and we'll begin with the technicals. So last week on Friday, I said that the euro was probably gonna move a little bit lower, but eventually higher, and that the traders would probably look to buy around 1750. You can see the market traded as low as 1723, so had an overshoot, but then eventually bottomed out here and moved to the upside. The reason for why I was bullish last week is just because the trend was bullish. As you can see, the price was, at least in the short term, creating higher and higher lows, and we already turned bullish on the break here. So on the break to 1750, the market moved to the upside. This was an opportunity to book profits, and then this was a decline. It was an opportunity to buy again with a stop down here. Now the market moved up to the high, and I think we will most likely reach 119 and 119.50, and then we would just need to see exactly what's going to happen after that. But I'm bullish, and in the short term, you know, if we don't take out this high in the next few hours, then I think we're probably going to revisit the low. And if we do revisit the lows, I still think traders are going to look to buy down here between 1750 and 17, and most likely stop loss orders for these bullish traders are down here. Now, something you need to bear in mind is that this is a corrective move. You need to remember that the euro was in a strong downtrend. So longer term traders, they're looking at this and they say, all right, I'm looking for a stronger decline to the downside. And the same way as I pull a Fibonacci from this low to this high, they're doing the same. They're pulling Fibonacci's from the very top to the low, and then they say, all right, this is the first fib, and this is the 50%, and this is the 61.8. So when we go up here, some of these whales, in essence, they sell at these levels, which means that you can get aggressive declines to the downside. Now, the way I like to work with it, is that I like to work with the short-term uptrend. So I'll stick to that bullish view, but then when the short-term trend turns bearish, I like to position myself for a decline. Now, the drawdown of that, of course, is that I'm not going to be selling at the high, but the big benefit is that if the market indeed just continues to head to the upside, I'm not going to be stuck in a position that moves against me. Technically, it could move against me, you know, what can I say? I mean, technically, it can trade above 125, so it can go much higher. You never know that. So that's why trading the short-term trend with the big picture is my preferred setup. And this as well highlights something interesting. Because the big picture is still bearish to me, I'm not really that keen on trading this short-term corrective move. It's not the same here. Remember when we were trading here and I said just look to sell, and this is gonna go to 1750? That I was confident because I'm trading the short-term trend was going with me, as well as the big picture trend. Alright, this is Bitcoin, and I was bullish Bitcoin, and I was even long Bitcoin. Well, actually not Bitcoin itself, but Ripple. Ethereum Classic, and I was also long EOS. And I got out just before the big crash happened yesterday. So I got out for the total portfolio. It's about a loss of 4.5%, which I'm perfectly comfortable with because when this market rallies, it rallies and gives you 50, 100%. So, losing 4, 5, 10% here, and then you do that maybe 2 times in a row, and then on the third time, the thing goes up with 100% to even 50%, it's still worth it. Now, what happened here is that the market obviously was in a short-term uptrend or a bit of a bullish bias, without a doubt. You have this sort of triangle pattern like that, and you had a similar one like this one. I don't know if it's a triangle or whatever people want to call it, but it's a pattern where the market is converging. Now the market was in a downtrend like that, and then the market obviously took out that high. It took out that high, okay, and here, and I turned bullish, and this happened on Saturday last week, and the market moved up, but then it moved down, and then it looked like it was going to head to the upside. But I think what happened is that someone somewhere just got fed up. They just got fed up, and when I woke up on Sunday, I noticed that the price was trading down here. So I woke up around, I think it was about 10. I think it was about 9:30, 10 o'clock. So the market was pretty much here. And from a short-term technical perspective, this is a 1 hour. But if I look at it from a 4-hour perspective, you can see that at least in the very short term, when I was looking at the markets in the early morning on Sunday, the market had stopped creating these lower highs. In essence, it took out this level, and that was a warning sign. So then I got on with my day, and I said, okay, let's see if this market would like to bounce. And the market never really wanted to bounce. Moved up a little bit, but then it moved back to my entry. Also not to my entry, but the same levels in this morning. So around 4 o'clock, I think it was 4:30, I closed out my all my crypto portfolio. So I closed out the Ripple, I closed out EOS, and I closed out Ethereum Classic. So because I had decent entries in EOS and also in Ripple, I didn't take too much of a hit there. But on Ethereum Classic, I literally closed that out at my stop level. And let's see if it loads. It doesn't load. Anyway, I got stopped out at my stop level, and I got out. So, and that's an aggregate of about 4.5% loss. Now, the market right now took out. I mean, this is a big bearish candle, and it's likely that as long as it trades below 7,800, that this market will continue to trade to the downside. So I would not be hoping for a quick bounce. As well, there's some famous Elliott wave technicians with several thousands of followers, and then there's a bunch of other people as well that have a huge influence on people, and they literally been talking about buying all the time. And even on this decline, we're talking about buying, and as we're down here, they're talking about buying. In fact, they've been bullish for quite some time, for a long time, and that's just a big hint to me that the market is just still, hoping that this market is gonna bounce. And hope, as we know, is the last thing that leaves man. It's more likely that people will depart with their money, but they're not gonna hope they're not gonna depart with that. So I think here I want to maintain a bearish bias. I think we could bounce up to the low here, and this market will probably still be bearish. Might go up a bit, but I think eventually down. So I want to continue to remain bearish in Bitcoin. You also have markets like Monero. Let's see if I can load that, which were I was actually short Monero for a while before I turned bullish. So I actually shorted Monero on the break here, but then I got out here, and then the market turned bullish, and then now you have a resumption of the bearish trend. So Monero is one of the weakest one right now. So you got support, and the more and more you see these markets take out their April lows, the more and more will the psychology change, because they're gonna say, well, Monero is lower, it's supposed to be a great coin now, and then they say, well, this coin is lower, well, that's supposed to be great as well, and you know, all of this is supposed to revolutionize the world, but the only thing is revolutionizing is people wallets. uh, yeah, you need to be careful. In my case, I just took a loss, took a little hit, uh, and that's the way trading is. That's how investing is. Still up with about 35% for the year. Now, this is crude oil, West Texas. The market does not want to trade much lower. That's a bit of a warning sign. We have reduced the stop loss. It was, I think it was here, and then here, and then here, and now here. Now, technically, not much has changed. The market is in a short-term corrective move, as you can see, and it can continue to move to the upside. But my general view here is that when we took out this April 17th low, is that we're gonna probably head to 64, if not 63, and a simple fib from this high to this low shows that, you know, around the first fib, so 65.90 all the way up to 66.96, I want to maintain a bearish bias. Now, there's two options here. One could close out this position for a bit of a profit, just because this not much is happening, or you just stick with it. It's definitely not a buy, but it's having a bit of a pause in this decline, and I think it could swing up a little bit, and then maybe, I guess, tumble lower. Eventually, I suspect that if the market can bottom out somewhere here, I will turn bullish again and go with the big picture uptrend. Here's gold. Another one of these markets that is sort of very heavy, sort of struggling. I've been bearish here since, what is this? I think it's May 15th or something. Yeah, May 15th. Stop loss has been reduced. So far things are going okay. They're not going okay in the form of time. It's not going down as I wanted it to go down. I thought it was just going to go down, up, and then down. Did not want to do that. Instead, it went down, and up again. And a little bit of a warning sign. It's a bit like that Bitcoin position, or that crude, or it's not crude, but Ripple. So it was long Ripple and all these things. And, you know, if I was long for a week, so there's a bottom Saturday, June, I think it's Saturday, June 2nd, and then it's Sunday, June 10th, and the market did not move to the upside. It's a little bit of a similar situation here. The market has not moved to the upside or to the downside yet, and that's a bit of a warning sign. But technically, nothing has changed, nothing at all. The trend is still bearish below 1,307, and as long as trade below this level, this market can target a low, if not a bit lower. Now, this is the German DAX, and the German DAX is gonna take you money. Unless, of course, you're an expert. There's some people that are really good with the German DAX, and, you know, they have special services just on the base of DAX. And I know a guy in France that most all of his money is from trading things like the DAX. So if you're happy with it, it's working out as you wish, then just continue to trade it. Personally, I don't think it's the right way forward. I think this is a messy chart. Why? Because if you look at it from a daily time frame, there's not a particularly strong trend, and you have these lows down here, and I think those are the lows where people really want to buy. They don't want to buy up in the middle of the range where there's no bias. Now, in the updates I've been sharing with you guys, so you should check out the technical analysis section. You'll find all the analysis, and as well, if you're looking for a particular market, for example, you can click on news. You should at least be able to click on news, and then stock market and the S&P. So what I've been liking is the S&P. So here's an update from June, and here I said a break to 27.42 takes this market to the upside. I bought here myself on the back of this, and you can see where the market is right now. The market even tested that break at level, and now it's moving to the upside. I think the S&P could hit the March high. I'm also long something I don't trade too often, but I'm long the Russell 2000, which I bought here at 16.36. My stop loss is at entry, and I think this can go up to 17.50. And in the case of the S&P, if we're trading at the 2018 high, then that would not surprise me. In general, the world economy is doing okay. It's not doing terribly bad. If you look at the Italian stock market, which is something that people were worried about, well, look at it, it's up a little bit, and you just need to think about risk reward. The situation in Italy is not great, but selling the Italian stock market after a decline of 12%, 13% is not a great idea, unless of course the rest of the world is going to tumble. All right, here this market, if it's going to trade in the middle, in line with the setup I shared with you guys here a few days ago when the market was trading down here, would not surprise me at all. It wouldn't surprise me, as long as you're above the July low, that this market is going to head to the upside. So Italy is done and dusted. Is it going to be problematic? Yeah, of course it's going to be a bit problematic. But guys, there's been problems in Italy for as far as I can remember. In the case of the G7, the market, we already knew Donald Trump plays a hard game and he talks tough, and then he changes things. And I really like how he turns things around, and he said, okay, if we're gonna have real free trade, let's have that. So we have real free trade, and we're not gonna have any tariffs or trade barriers or subsidizes. Now that would be the total opposite. That would be so pro business that it would be probably causing the S&P and stock markets to double in a period of a year. Not actually, I'm getting too excited here, but maybe 5 years. If you get rid of all of the barriers that we have, then it really would help the economy. And especially if you're a corporate, if you're somebody that doesn't have like an education, that is already in a competitive market, then yes, it's gonna be problems, because now you're not just competing, say for example in Europe or in the UK, like you get a lot of high skilled construction workers from other parts in Europe where the wages is lower. But now you're not just competing against people from east parts of Europe. Now you're competing across the world globally, which means that if someone can produce something really cheap in the US, then you can buy that in the US. If someone can produce really good cars in Europe for a good quality, then you probably buy that from there. So you can, in essence, the whole market becomes sort of available to us, and that as a consumer is good, because suddenly we can buy stuff for a better price and competition increases across the board. And for corporations, this is amazing, because the good corporations that can capitalize on this would be a big cash cow. Of course, it's unlikely that that's going to happen. For example, agricultural products in Europe are subsidized to a huge amount. I mean, imagine if they would allow us to import fruits and vegetables and things like that from North Africa, where they're already producing things extremely cheaply, and maybe even better quality than the sort of fruits and things that we can buy from Spain, right? So there's already these things we could buy, but because of trade barriers and things like that, we're forced to buy maybe a product that could be inferior. Now, it's not mean that it's going to eliminate everything. Some say French wines or French cheese, you can only get it in France for that quality and that price. Certain cars, you can only get that, for example, in a place like Germany. And other things like industrial, like arms or anything else, sort of high tech whatever. You can get that from the UK, you can get that from Sweden. So it's not that it's going to be a total collapse, but you're going to have much more options. And that is interesting how Trump goes really strongly, sort of trade tariffs, but then turn things around. Now I don't think that's going to happen. There are benefits of subsidizing your agriculture. One is if you have war, then you're not dependent on somebody somewhere elsewhere to produce your food. So you still have your farmers. So there's benefits with everything. But economically, of course, if they would push towards this free trade agenda, it would be probably the best thing that would happen for a long time, and will reap benefits 15, 20 years. But not everybody. People with no education, which is already struggling, or they will struggle more because they're gonna now have competition from all the G7 people. Now, overall, on bullish stocks, the market as well does not seem to care too much about the situation in the G7. I think it's important to remember that nobody had huge expectations for that. And maybe it is that people are focusing right now on things like Kim Jong-un. Maybe you will have less risk aversion if you actually manage to strike a nice deal. And maybe make the world slightly safer, at least at face value of things. Okay, let's see if we have any questions. Okay, so no question, just a good morning. If you have any questions, please submit them now. And a little reminder, we start at 9 a.m. Usually, not always. Unfortunately, I have technical issues. But I will try to make sure to be online at 9 a.m. Going forward. If you like the video, don't forget to hit that like button. Just click here if you like it as well. It's a good and nice way and a simple way for you guys to support this morning update. Uh, Alright, we're gonna wrap things up. I don't have any more questions. Guys, have a good trading day today. And don't forget to check out the technical analysis section for more analysis. Nathan and Yuri have already posted articles today. I'm gonna post some this afternoon as well. Thanks for watching.